we heard, for example, of Dirk Niepelt, but also of others, why wouldn't we need a sovereign money system, but for example, a CBDC? So where's the difference? Why shouldn't we introduce a sovereign money, but why could CBDC actually help the current system to be more stable?
Good question.
Well, one thing you can see from the American data is we've neglected this because Milton Friedman gave velocity of money a bad name. But if you look at the velocity of money using what's called the money of zero maturity, MZM, on the St. Louis Fred database, you'll see it was running about 1.8 times turnover per year in the 1950s and 60s, peaked at about 3.5 during the high inflation period before Volcker's recession. It's now running at just over 1. In other words, money's not turning over rapidly at all. And I think a major reason for it is people and corporations carrying so much debt that their response to that is to hoard the money they have to try to save it for refinancing their debt. When you hoard money, you don't actually increase your savings, you slow down circulation, reduce GDP. Now, if you bring in a form of money that doesn't have a debt associated with it, in that sense, which as Huber's presentation showed, central bank money used to be the case when it was much more part of the circulation, and digital currency would be if we brought it in. I think you might see a higher circulation rate and more money generated out of that, less reliance upon credit, which is one thing we vitally need because we've had far too much credit, therefore far too much private debt.
But wouldn't that lead to an economic downturn?
Yeah. No, the opposite.
Sorry. But couldn't you achieve that with a more expansionary policy?
Well, you show me a country that's done an expansionary policy in the last 30 years.
Well,
okay. They've been paralysed by the argument they should run surpluses. You're saying, okay, if we change our minds, we can do better. I completely agree. I've seen no sign of a change of mind.
But what you have been saying here is that actually you think it's a problem if you create a system where you create less money. But the problem we have right now is that we have far too large credit volumes in the total economy, and that it has to be reduced. So to say that that's a danger for growth. Well, it's not the decreasing of the credit volume that is a threat to growth. It's the way we create credit that is the challenge to growth. We have to find other ways of doing it. So today we have separated a little bit the questions between how we create money and how we use the creation of money. And I think that's something if this had been going on with another day, we should actually discuss that more, because that is a real issue. For what purpose do we create money, and how do we use them, and how can we create money in a better way that supports the real economy?
Yeah, coming back to that question, why having digital currency and or sovereign money, and I think there is a confusion of terms, because sovereign money actually already exists. It's nothing new. Sovereign money existed for over 2,000 years. Treasury issued or central bank issued solid coin is sovereign money. Central bank issued notes are sovereign money. And in some countries, such as in Switzerland, also the central bank reserves are by constitution registered as being sovereign money and unrestricted legal tender. But bank money is not sovereign money. Bank is a privately issued money surrogate. And so the question is not to have digital currency as well. Digital currency is sovereign money. And the question is, you see, we have that coexistence of different monies. And today, so the dominant type of money, that's bank money, it's bank deposit money. Bank deposit money determines how much money is created. It's accommodated by the central banks. And the sense, in my understanding, the sense and purpose of digital currency is to expand the amount of sovereign money in circulation so that central banks might regain a degree of control over money, because today control over the creation of money is lost and the effectiveness of conventional instruments of monetary policy is largely weakened. And the more digital currency, or say sovereign money, is introduced in comparison to still existing bank money, so the more the type of monetary control will be regained, not control over credit. In one moment you put it as if sovereign money would mean some sort of government always intervening and government determining and so on. It's not that, not at all. It's about who has control of the money. That's all.
I would say that the important thing is, I very much agree with you that it's how we create debt, why, and so on. I mean, if we, for example, as in Sweden, has had this very high increase of house prices, that leads to higher house prices, leads to more loans, of course. Then maybe you should try to go to the bottom of this problem and say, okay, why do we have so high house prices? Probably because
cheap loans.
Yeah, definitely to some extent, but also to a large extent that it's been very restricted building things for a long time. So, and if you don't have cheap loans, I mean, if you don't have a low interest rate, what would you have? You would have many other problems. So I think if you see, okay, we have areas where we have too much credit and too little credit, we could go directly for that. So I would say the problem, if you have problems with credit, and you can get that in some areas and in some countries at some times, then you should do something about that. But it doesn't have anything to do with the E-krona. So I would say it's the credit thing that is interesting, and I agree that sometimes we have problems with that, of course.
Yeah, I also have to comment the credit risk that you mentioned, that's putting a CBDC system in place. You argued that it would mean that then the central bank will have to re-lend the deposits that it already has, but that's not how the monetary system works. In that case, if you try to re-lend the deposits, you are actually creating new deposits against the loans that you are issuing. So in that sense, you are creating money not just by issuing it against government debt, but then also issuing against private loans. And this is exactly what is not the idea here, but it's the idea that we need to separate money creation from bank lending, and that's actually the subtitle of my PhD.
And but does it? I mean, if you buy government bonds, then someone will sell the government bonds and lend it on to the general public. I mean, in equilibrium, I don't see the difference.
The difference is if you create money connected to in the lending, then you connect money to credit. Money becomes credit. Compared to sovereign money, then it's given out directly from the not from the state, I would say, not from the central bank.
But
then money will not be connected to lending.
But
to credit, it will not be credit anymore.
I mean, you could imagine a system that is say, okay, if you want to borrow money, now you get it on your deposit account, and then you can use it for whatever you want to use it for. But you could instead say, okay, we will give you a 10-year bond. That is not money, that is a 10-year bond. And then I will sell my 10-year bond on the market, and then I will buy my house or whatever. And someone will buy this bond, and then in equilibrium, when everything comes down, it will be just the same amount of deposits and bonds, regardless if you issue bonds or if you issue deposits.
But issuing bonds, that's what the state bond. I assume you talk about state bonds. That's when the state need more money. They issue bonds and they can get money. So they are sort of borrowing money from those buying the bonds.
Yeah, but but banks have a lot of bonds. I mean,
of course, they are buying from the state.
No, but they issue a lot of bonds. I mean, say that.
Okay, you are talking about housing bonds.
Yeah, and other bonds, but
But still, the money that circulates are connected with lending.
Yes, but then if you get your money deposits and say, okay, how much? I have a certain wealth. I want to have some in deposits, some in bonds, some in shares or whatever, and then I adjust it. So if I get from the bank, if I get a deposit from the bank, and I would like to have a house, I will get a house. And if I would like to buy a bond, I would like to buy a bond. I mean, what I get, then I could adjust it. So if the bank gives me a bond, or the bank gives me a deposit, or the bank say, okay, you will owe us 1 billion crowns, but instead of deposit, I will give you a piece of gold, and I will sell the gold and buy whatever I want. I mean, it's in equilibrium.
I think we're getting a confusion here between a loanable funds model of the world and the real world. You understand where you're coming from, I think, but you're putting forward fundamentally the neoclassical vision of banks as intermediaries, and that's an interesting academic theory which should have been thrown out in 2014 when the central bank started to say it's nonsense. So it's interesting to hear you repeating it again here, but this is why economic theory is a problem and not a solution.
Yeah.
I'm sorry.
So what's wrong with it?
It's totally wrong because loans create deposits. This is...
but you could make loans that don't create hope.
Yes, okay, be in a different world and it might function differently to the planet we're actually on. But unfortunately, this is the planet we're on and your theory is wrong. And it was frustrating enough to spend 50 years saying that before central banks came out and said us rebels are right and the mainstream is wrong. So I'm not going to stand here and put up with the mainstream view after the central banks themselves have started to contradict it. Please read the Bank of England 2014, Bundesbank 2017 and catch up with the real world. Tell us about how that functions.
But I think that is. I think that discussion, as I have understood it, is more about do you create money and push it out in the economy, or is it the interest rate that?
That's completely narrow and wrong way of interpreting it, which is not amazing from people trained in neoclassical economics, but it's factually not correct. If you want me to give you a 30-second demonstration of the difference between the two using a dynamic software package, I can do it. But you're really talking about a world in loans, which loans don't create money, and that is not the planet we're on.
Let me come back.
Can I just 1 second? This has nothing to do with neoclassical economics or not, right? I mean, because you seem to suggest that mainstream economics sort of doesn't get it, and the Bundesbank and the Bank of England to some extent get it. There's no relation to neoclassical economics. Neoclassical economics has certain basic axioms that we work on, and everybody who would study that and would subscribe to these axioms would be perfectly fine accepting that world of the view that banks create money. So there's nothing
Where's
in terms
Michael?
of neoclassical economics.
Where's Michael? Come forward, mate. Can you have a neoclassical reply on that?
What do you want me to do?
Do you think neoclassical theory in general understands money creation, or are you a rebel in neoclassical, or are you part of the mainstream in neoclassical?
Well, no, I mean, you can use neoclassical tools. You can use neoclassical tools to represent money creation, but the profession has chosen 99% to not do that.
That's what I'm saying.
Yeah.
You're the exception.
Okay.
Maybe to go on with another question. I think this whole debate now goes a little bit into the direction if you want to have a debt-based money system or not. And how I understand it, here, sovereign money could be a system which could be not backed by debt. And there's a question: is it a moral issue with the increasing debts in society? So expecting our children to create a much larger GDP and in a climate neutral way, also, of course, with higher debts. And could a CBDC, or especially a sovereign money system, or a transition into a sovereign money system or full reserve banking help? So to reduce the debts.
I take the freedom. Personally, I'm not so sure, because you see, in a sovereign money system, or say in a system where sovereign money is the dominant part of the money supply and not bank money, the issuance of the money can be debt-free. It can be issued just as genuine seigniorage, as a gain of money creation. It does not need to be issued in connection to a credit contract, not necessarily. But you see, the entire economy as such is highly monetarized and financialized, and the entire economy will still be much in need of credit or loans and investing and so on. And so far, I don't know of a feasible alternative to the allocation mechanism of interest rates. And so do not expect, you might expect, as Patricio has found out, you might expect the level of indebtment to be a bit lower, but don't expect the economy and society no longer to be indebted. That will not happen. It's, in my opinion, that's impossible. And it's not necessary because activities in modern economy need to be pre-financed rather than refinanced, you see. That's the point.
Okay.
And yeah, if I'm, you see that you have said it before, money is just money. And money should not be mingled too much with, say, fiscal aspects and certainly not with politics of the day. And if it's about environmental policy, which I'm very much in favor of, or if it's about, how should I say, redistribution of wealth, that cannot be a task of the monetary system. That will be the ruin of any well-working monetary system. And so I'm not a friend of mingling questions of how to run a monetary system with questions of the politics of the day or the area like the greening of industry and so on.
Well, I think the sovereign money system will create a great improvement. And right today, there are two types of loans. You can loan from a bank, and that money is created of nothing, and you have to pay back later. You get more resources now, but you also take a loan by your sister. She has the money already. The difference is that in that case, you loan money that somebody has don't need right now. After sovereign money reform, all loans will be, also banks will create that kind of loan. They first have to get the money in, and then can let it out. They were part of the circulation. They was actually working in the way we thought they were doing. This means the complete debt level in society will go down, and the investments that is needed will be more into the real world. And we will get rid of these investments that only are there for speculation reasons, to buy an asset that already existed. So that's the best, will be good also for the environment, because then the real low-hanging fruits that's necessary for the environment will be seen.
And given the current very high debt levels and interest rates being close to zero, central bank balance sheets inflating, trying to get aggregate demand running and trying to get banks actually creating more loans, if no sovereign money or if no central bank digital currency that would change this system or this way of getting more demand would not take place, what could actually be done in the current system? So what are the next steps? I mean, everybody is talking about recession now. The debts are extremely high. So what is the future outlook if we wouldn't include or introduce a CBDC or sovereign money?
May I allow to get into this? I mean, I think a major problem right now is that we have got into this debt-driven growth. And behind that, in an overall aspect, is the fact that the states are so on debt, all of them, and don't have the space to actually stimulate demand the way they should and make the investments in sustainable development, for instance, that they should. So we have to solve that, and there are solutions that are with IMF and others thinking about it. Can we do something about this debt level? The thing is to do it in a way that don't create a system for the future where states start to misbehave. But we have to do something about this general high level of state debt to get another way of driving the economies forward. And that includes what some people have mentioned here, helicopter money could be one part of it as part of a change. I mean, even Charles Goodhart, my friend, is arguing for helicopter money now. As that's much better alternative than these minus interest rates and driving credit so far as we are doing right now. So we have to think in a broader respect. But I want to support you in one way. You talked about this maturity thing. And maturity mismatch is actually one of the major problems for our banks. And there are many ways of doing it. But you are aware of, you mentioned this about bonds. Issuing bonds is an alternative to base money from a capital requirement point of view. But on the other hand, why not buy base money? Why not get yourself into a better situation with the mismatch that you now have? We're using both bonds and base money. But that's a question. We really have an issue with our banks in Sweden about the mismatch, and you know that. If we get into a severe situation globally, you will have to go to Riksbank quite immediately because you're cut off from the overnight market.
Well, now if you haven't understood it already, I'm from the Swedish Bankers Association, and I think, I mean, if all hell breaks loose, something could happen. And I think Swedish banks are I think that you ranked all the banks were ranked by creditworthiness and so on. And the major Swedish banks were all in the top 20 of the 500 banks. I mean,
which just telling you how bad the whole system is, actually.
Anyway, yeah.
But you know it's a major issue with the mismatch, and that you're also dependent on overnight. Okay, and you're also dependent on overnight credits, and to get out of that, actually, a step towards more of base money or sovereign money could be one way of doing that.
Well, if you say you have deposits in the Riksbank, exactly. And the Riksbank lends the money to the banks on, say, longer terms. I mean,
exactly.
You could do that. I mean, yes. You could do it.
It's one step.
Yeah.
That's one step.
But you must but you also have to do that on the same interest as okay.
Yeah. Can I say one other thing?
Sure.
Joseph, I'm not sure I totally agree with the point that you made that you shouldn't expect too much in terms of debt reduction, because I think that's ultimately an empirical question. You know, we observe banks out there that have created one hell of a lot of money over the past few decades to a very large extent, but I don't know how large. That money was created so that there was enough purchasing power in the economy. Partly now purchasing power in order to transact in financial rather than real assets or goods, but we need that purchasing power. If that purchasing power was created by a central bank, to what extent do we still need that? We will still need it, I agree with you, because people are different. Some companies need cash. Some have a surplus, some households have cash, and some others need cash, etc. That heterogeneity is what makes us need financial institution. The proportion of those two things, creating aggregate purchasing power just so that there is enough circulating, and the heterogeneity, I've had long discussions with Charles Goodhart about that, to what extent one or the other is more important, but that's an empirical question.
Yeah. I agree, basically. Yeah.
Yeah. There's another question, maybe focusing on current possible regulations, which is basically separating retail or commercial banks from investment banks. What do you think about separating these two functions? Would that make a difference?
Yes.
And why?
Less risk.
And would it be an answer to the questions that we are discussing, or that we were discussing here, and the problems we're facing? So better way of getting the economy running, or reducing debts, or anything like this? Or is there a link at all? Or
Well, I would say that there's no link to the deleveraging process, because that's a system you might want to have in place when there is not that much debt. Because when you have a separated like commercial and investment banks, then of course there's less possibilities for the commercial banks to create new money. But then if we already have huge amount of debt level in our economy, this is not how we get the debt level down if we implement this type of system there. It can make things even worse, because then the banks cannot really operate there. So we need other measures to compensate that, and of course helicopter money is one option. Then central bank financed government deficits might be another, and that's one of the problem in the euro area, that we really the central bank is financing government bonds, but it's not financing government deficits. So that doesn't really have any effect on the fiscal policy that we are conducting here in the euro area. So that means that the fiscal stance is quite tight, and well, you know the problems that there's in unemployment and so on and so forth. But I would also say that under sovereign money, it doesn't necessarily mean less debt, although that depends on how you define debt, because some people want to define debt as anything in the liability side of a balance sheet. So you might have the money even as a token, or even equity would be debt in that case. So I would be perhaps a bit more careful and talk about transformation of assets to different types of assets. So there will be different types of liabilities. There will be sovereign money liabilities instead of bank debt.
Mm-hmm. Maybe last question, looking at the time, there was a question on whether or not basic income could be financed through new monetary instruments, through monetary expenditure. Maybe you could shortly elaborate that.
I can say something, because when you're creating money directly from the central bank, sovereign money, it will not be at all as much as needed for basic income. The fiscal system are transferring a lot more, 20 times more money each year through taxes. And so the basic income has to come from that part. When you turn into sovereign money, during the process, these 30 years I talked about, maybe there will be in general 100 crowns, 10 euros a month during these 30 years. But then after this, if you have 2% inflation, and zero GDP growth, you will just have 2% more money each year. This is much lower than the fiscal system. So the taxes has to handle basic income, and has to handle all the big things like the environmental systems and so on. The monetary system only shall, in my opinion, keep the value of money stable.
I think in our paper we had a calculation which, if you do the maximal reform, which in our case was a Chicago plan of 180% worth of US GDP, which is like the entire liabilities of the banking system at that time. And then if you have a 2% inflation, 2% growth economy, you could grow you could collect seniorage revenue of about 3 to 4% of GDP. Right. That's not Christmas, you know. I mean, and so I mean, I hear this the whole day. Everybody could I have another Christmas present? This present, that, you know. That should be completely separate from this debate. This should be about designing the right system, and then what the fiscal authorities do with that. That's for a different conference.
Yeah. Correct. Yeah. And maybe a last question. It was also written here. Chicago plan was mentioned. You also touched you also touched upon it right now. So maybe a quick introduction into Chicago plan, and where's the difference between the Chicago plan and sovereign money?
I thought
maybe you start with the Chicago
Miguel
plan.
Ordóñez proposed essentially the Chicago plan.
Well, but the Chicago plan. The Chicago plan has an specific, that is the division of the banks, that is thought in an analogical world where you could not have 70,000 million accounts. Then the spirit is the same. At least it's full reserve banking, and you could call narrow banking limited purpose and have small differences. The idea, the important idea, is you want to have as money a safe asset or not. That is the simple as that.
Yeah, I agree. The spirit of the 100% reserve approaches and today's sovereign money approach or digital currency, the spirit is the same, but in the monetary system it's different because the sovereign money is something beyond the reserve system. You know, the present system is we have a split circuit. We have an interbank circuit on the basis of central bank reserves, and we have the public circuit of bank money. And if you have a 100% system, you still have that difference that you have the banks own the money, even if the deposits are backed 100% with central bank money. The banks are the owners and not necessarily the deposit holders. And there is a number of additional questions, particularly how to make sure that the reserves travel with the bank deposits that are 100% backed. And it can be done, by the way. It can be done, but it's complicated. It's more easy and more easily understandable and more easily implemented to have, so to say, as Dirk Nippel said, to have, so to say, reserves for everybody. And that's much easier to understand, and it's more accessible also for a wider public. But the effect and the goals, the monetary goals, are largely converging or the same, yes.
Okay. Then finally, I would ask everybody that participated here at the conference as a speaker to give like a short summary. What has he learned about today's topics, E-krona, CBDC? How are we going to go ahead and maybe summarize his position very quickly?
You mean the three points at the end, or
your final remarks?
Yeah. Well, a final remark. So many people here at the panel. I'm a researcher. I'm not a decision maker. But I would say, as I said, I'm very much convinced we are already in that monetary tide change, and a strong indicator of it, this propping up, this mushrooming of many new initiatives. And I think we better need to understand all of these new initiatives. And you see, what I mean is narrow banks coming up on a reserve base, safe depositories, and fiat-backed e-money institutes and currency-backed stable coins and so on. And we should better understand that and how that relates to sovereign money in a sense of digital currency, because we should make sure that all. I'm in favor of that pluralism or multitude of possibilities. I agree with that, but the important point is to make sure that all of it operates on the basis of central bank money. That's the important thing. And that's my final remark.
Thank you.
Okay, for me, I think this is really necessary in the world right now. Seems like Sweden have come to sort of the monetary system today have reached some kind of roof. The house prices has been rising very quickly in Sweden for a long time, but now the last year it has stopped. And this means that there will be fewer and fewer money created through loans. And the Riksbank will have it harder and harder to keep the inflation up. I don't think there are any other way than to start with this citizens' dividend over helicopter money. And so this has to start now. Otherwise, the money will not be what we can use. We need them for. And also to be able to stop this connection between money and debt. To do this debt deleveraging. It has to be done, and has to be done slowly, because people, my sons have both bought houses the last 2 years on the top of the prices, I think. And of course, they have a big mortgage to pay off. And that will hurt if the big crisis comes, if the Riksbank or the Swedish society doesn't have a plan for that. So I think the best thing we can do is to start this and understand how this can be done, and let the Riksbank have the tool to do this smoothly for a long time, for 30 years. That's my final word.
Okay, well, thank you. Well, first of all, I really liked Miguel Ordóñez's way to see the things and how to present this issue, and you also presented how it's a different thing to have a payment infrastructure and payment services, and those are usually not seen as separate, but they should be seen as separate. The infrastructure should be public, and then the services would be private, and we should have private payment services providers, and so on and so forth. And so I like that approach a lot. But maybe my final remark is that at least I think that sovereign money would have big advantages to the economy. But what is unclear is what are the international aspects. What would happen? How other countries would deal with a country that would implement this type of system? I mean, politically, and then of course the business community, the investors. I don't know how that would happen. It might be a good thing or not, or a bad thing, but that will need some kind of research before implementing this type of experiments. But I also presented that we tried this system already in the 19th century, although that wasn't a full sovereign money system. It covered only cash. So at that time, deposits were not that common, and the cash was the prevailing means of payment. So and that led to the situation we are now. So deposits picked up, and bank deposits are now the prevailing means of payments. But my point was that it didn't cause a collapse at that time. So I don't think that it would cause a collapse if we try to implement this type of system today. And to be more secure, let's first try implementing central bank digital currency, and then if that works, maybe we can move on to a sovereign money system in the end.
I hope not to repeat too much in this final, but I think that the idea is that, of course, it's very good to present the advantages of CBDC and so on. But in my view, what is important is to look at the banks. The questions are the banks. The banks being protected, it is impossible to introduce new technologies, new possibilities. What we are viewing in many things in telecommunication, where we separated the networks, or in air transportation, we separated the airports from that, and the market provides by a multitude of possibilities. I mean, booking. I am too old to say that the reservation in the hotels I did in travel agencies. Well, travel agencies now make 15% of it's internet, it's platforms, many possibilities that we don't have in the lending to families and small and medium enterprises. We will be surprised. Then my final remark is, don't be afraid of markets. At the end, markets surprise and give multitude of possibilities. And if we have safe money, we could liberalize and we could have market.
Well, what I think that maybe I have learned today is that there are a lot of questions, really policy questions like house prices, how to get the inflation up, the banking system and so on, and that is something that I think that maybe for a long time it has been that the Riksbank take care of the macro policy, the Finansinspektionen take care of banking regulation, and the government do politics in whatever way they like. But and that usually works during normal times. But now when we are in this situation with a very low interest rate, and the Riksbank is constrained, then you maybe need to take a whole grip and address all of these questions from the politicians' side and say, okay, we have very high house prices. What should we do about it? And take a look at taxes and so on. And I think that there is a demand for solving all these problems. Mm-hmm. And I think maybe it's too much to ask for the monetary system to solve all these problems. Mm. So I think, try it maybe. Yeah, I think we have problems, we have to solve them, but maybe we should be sure that when to use the monetary system and when not. No, whatever.
Thank you.
Yeah, I don't want to make a big statement. I mean, basically what I learned something that I didn't know, just how exciting the developments in some countries have been. I hadn't followed that to the extent I should. The Netherlands, Iceland, also Turkey. There seems to be quite a lot going on. And this question is going to be with us for a long time, I think, as long as debt levels remain so high. And so I totally agree with Steve that private debt levels is something that we need to watch a lot. And then as far as the actual research is concerned, once you are taking this view, this opens up such a multitude of things that you can do research on. It allows you to reconsider a lot of questions in economics. Like, for example, I'm right now working on what does this model of banking actually imply for our interpretation of international capital flows and what that actually is. What is an international capital flow? There's an incredibly rich research agenda that once you start looking at the world like that opens up. And I just wish, I mean, it's exciting for me, and at the Bank of England this is fully supported, but I just wish more people were working on that, because it's just, we have a lot of really important problems before us in the real world. And what I observe in academia, unfortunately, is that very often models get built of a parallel universe, of a model that is sort of interesting to analyze as something in and of itself. But once I start to relate this to the real world, well, this is not really our world. It's an interesting world, okay, but we have so many real problems. It's just incredible how many real problems we have. And that's why I just wish, and I encourage anybody who has the capacity to do this, to really do research on these questions, because a lot of questions are waiting to be answered.
Thank you.
I think a lot of our problems come from banks having abused the privilege of creating money. And economic theory, of course, has completely sidetracked us from looking at that by saying they don't create money and then totally distorting our understanding of it. One thing we need to do is reduce private debt levels by at least 50%, if not 75% from where they are now. If you look back in the 1950s and 60s, when private debt levels, say in America, are about 50 or 60% of GDP, that was the golden age of American capitalism. And I do see a strong relationship between the lower debt levels then and the better performance of the economy in those periods as well. The E-krona, which is, again, this is one thing Michael's just pointed out, I think Sweden is further ahead on this sort of ideas than virtually any other country, gives you a mechanism by which the state could create money to reduce the level of private debt. The helicopter money concept we've all heard about needs a mechanism by which the central bank can access private and increase private monetary stocks through its own money creation. And the E-krona gives you that mechanism. Now, one reason why that wasn't done in the UK during the financial crisis was they argued they had no mechanism by which they could distribute the money back. And having worked with the British taxation system, I can understand why. It's like a 19th century donkey with its legs reversed. Whereas in the Australian situation, with the taxation system being all electronic, it was instantly possible for the government to make a injection directly into people's bank accounts. The E-krona gives you that capability, and it means you at least have a tool by which you could address the residue of problems we have of letting private banks create far too much debt.
In the country that I come from, then there is a saying that if you don't like the weather, just wait, because it's changed very fast. So when I started at the central bank, I was thinking, I don't like this monetary policy. Should I wait? Nothing happened. And that is even despite the fact that in 2008, all of the banking system collapsed and took almost all the economy with it. And why? Because the banks were creating a lot of private debt. It was a bubble. Okay, so it takes a lot of time for central banks, to change. But I've been really encouraged today to see that there's a lot of things going on, and much more than I realized. But still, I want to say, get realistic though. This is going to take time. And it's better to start somewhere. And if you have something like e-money, and if you give access to central bank money, you're on the way. So get practical.
So I think you actually said it. So quoting the Bank Association, which was surprising, but. It's really an issue now that we have put too much pressure on the monetary policy and the Riksbanken to drive growth and inflation. And this is not sustainable. And this is one of the true reasons why we have the issue with increasing debt, because we are into this debt-driven economy. So we have to get out of it. So how do we do it? As you said, we need a coordinated policy. And one thing that we have to start with addressing is a sovereign debt. Do you know that central banks have actually $25 trillion of sovereign debt papers assembled during the quantitative easing? It's an enormous amount. And if you do it in a smart way and actually get out of that in a way that doesn't distort the relation between currencies and the total situation, everyone would benefit from it, and the states would get the chance to start doing what they're supposed to do, to create the aggravated demand that we need and the conditions for households. And coming then to this question about what do we do about this household situation? Well, it's unsustainable from people's point of view, but also from the banks, because you know, and you actually had it on your slides, that there is a mismatch that for the banks that is very, very dangerous. And I saw that Riksbank hoped that E-krona can partly solve that problem. Well, that dialogue has to take place. We actually have to solve the questions about how we are financing this and actually taking some of it out before it becomes a bad debt, out of the balance sheets of somehow, or isolate it in the banks to prevent it from developing to a major crisis. So there is a lot of cooperation that needs to be done. And in this process, sovereign money will play a bigger role. But I mean, it starts with addressing the problems where we are. And I see more base money, which is what we are talking about really, to have an increased role in that process. That's what I see. But I don't think it's in itself a change of that perspective is where we have to go right now, or is the solution in itself. But it could play a role in a package of making us getting out of this debt-driven bad circle.
Thank you. Yeah, I'd like to make 2 points. The first one is that it connects to what you just said. I think CBDC is not the issue. The issue is CBDC plus. What comes with it? What is the accommodating policies that come with it? Because they will make the difference. Any situation that we can have in the current system, you can continue to have in the world with CBDC if policy takes certain form. And the other way around, anything that we might dream of in a world of CBDC, as long as it satisfies the basic laws of economics, anything in that world you can carry in the current world without CBDC, subject to some accommodating policies. So it's not CBDC which makes a difference. The difference is what comes with CBDC. What CBDC really makes more likely, in my view, is that the political process takes a different path. And I think that is also what I take from this sovereign money movement. This is not in any sense a revolution in economic thinking. People have been thinking about inside and outside money for centuries, right? This is not new. What is new is that the general public thinks about that issue. And that makes a big difference, in particular, once you start experimenting with CBDC, because then either you get different outcomes, or if you want to maintain the initial outcomes, you need to change policy quite dramatically in other dimensions. And that is, in my view, very, very unclear that the general public would be willing to accept that. So the main change of things that we see these days with the sovereign money movement is that public awareness will change political pressure on the monetary system. It's not that the economic system or our understanding of it has changed. It is the public pressure on the political monetary system which changes.
Maybe two remarks. So the first remark, what I learned today again, is how important the problem definition is. So you see, it depends on the problem definition what kind of debate you get. And in general, I think what central bankers tend to do, they have a very narrow problem definition. So there is the monetary reform movement has a quite broad, broad problem definition, and quite often I think too broad. So a lot of different topics are connected to sovereign money or to monetary reform. But central banks, on the other side, they take really a too narrow view on the problem. So I think, in my view, it is still about, by design, a fragile monetary system and over-regulation or over-invention and over-protection of the banking system. So, and I think that should be the scope of the research and also the political debate. So to solve these two problems. So that's the first remark. And in the end, so that has also to do with the second remark. So for me, the key is the entanglement of public and private affairs and responsibilities. So I'm not against private money creation, but I'm against state support for private money creation. So in the end, what will happen in the long term, so that we have one public form of money and really thousands of private monies. So maybe in the future, I will have tokens of securities of ING. And I will have tokens of the securities of Commerzbank. And you all can trade online, but then you use market liquidity. And what we all share, that's one common thing, so that's the public money, and that should be organized by our political legal system. So that's my main takeaway.
Thank you. I think we've come to an end of this whole long day. I want to thank you all for coming. It was a pleasure having you here and hearing your insights. Also, the other side, so to say, you enriched the you enriched the conversation, I think, a lot. So thank you all for being here, and let's get some food, I would say. Yeah.